All right, the summer doldrums have not slowed down the crypto gravy train. The merge date has been set. What does it mean for all of us? We'll get into that. Yeah, so we've got some huge news coming out of NFT world. We're going to get into that. California passes new crypto legislation. What does that mean for those of us in the U.S.? Is the U.S. government finally in ultimate overreach mode as it relates to what's happening with Tornado Cash? We'll get into all this and more. It's time for Money Talks. All right, welcome to Money Talks, everyone. As normally, we've got a lot to get to and a short amount of time to get to it. In a few minutes, I'm going to bring in Deepak and Amit from our team, and we're going to talk about trading, macro, and a bunch of other interesting updates. Let's see, I've got a whole list of things here I want to get to. So let me see what's first. So let me talk about macro first, right? We'll get some price action. So it looks like the jobless market, or the full-time employment market, as I should call it in the U.S., is really collapsing, and it's hard to decipher the data. But probably the most important piece of information I've seen this week is this flip that's happened between full-time jobless claims and the migration to part-time employment. All right. The number of multiple job holders whose primary and secondary jobs are both full-time has hit a record high. Something weird is happening here, right? There's a structural change happening in the U.S. Employment markets, right? If you extend this data back to the beginning of the year, we find that since March, the U.S. has lost almost 400,000 higher-paying full-time jobs, while gaining 335,000 low-paid part-time employees. So this is not good. I don't fully understand what this means, except for the fact that it really means, at a minimum, it certainly means that the U.S. Economy is in some type of trouble. At the same time, right, U.S. factory orders unexpectedly tumbled in July as war spending tumbles related to what's happening in Ukraine and other places. Obviously, we now have the effects of getting out of Afghanistan completely as well, although that's happened many months ago. So you probably noticed, I tweeted about it, the ISM survey came in. It was not a plummet as I was expecting, but certainly it is showing signs of a globally weakening economy. It looks like factory, or I should say supply chains, are increasing their supplies out of fear of another kind of COVID-like slowdown, given all the things we're seeing in China with new lockdowns and potential disruptions to supply chain there. All of this basically tells me that the great pause is coming, although, as I said last week, it's probably going to be delayed. Now, delayed probably means sometime in Q4. I said November. I still think it's November. Maybe it could be delayed until Q1, but prices are plummeting. We could be in a period of disinflation by next summer, and unemployment is moving in the wrong direction. All right, so all of that is generally going to be good at some point for risk on assets. I do think that there's some potential for short-term pain. Let's go to the Ethereum charts. We're going to talk about the merge in a couple of minutes, but leading up to the discussion on the merge, let me just show you where we're at here. Ethereum's up again. We were way off the August highs over the last couple of weeks, and you can see we're still in a downward channel here, which is not encouraging. But it does look like on the broader daily, an inverse head and shoulders is forming. You can see here the shoulder, head, and if we can basically break 2,000, another shoulder could potentially be forming here. That is very bullish, but we need confirmation. So we're kind of in the doldrums of summer. No man's land, which is kind of given that it's U.S. Open time. For those of you in the US, it's that place between the service line and the baseline where you don't want to be when you're playing tennis. You don't know what's going to happen. And we're kind of in this mode where we don't know what's going to happen. And when we get Robin on in a few minutes, we'll talk about what's happening and what he's seeing in the trading world. And we'll talk about that some more. All right. So some other news that I wanted to mention, and we will talk more about price. I'm seeing some comments, what I think is going to happen in the short term. We'll get back to that in a minute. So we talked about factory orders. We talked about employment numbers. I do think, like I said, I think we're going to be sideways and very, very volatile for a while, but it could lead to a significant move higher once the pause happens. Really interesting stuff happening in the world of NFTs this week. I don't know if you saw the Moonbird conference or online event was super interesting. I tweeted it out this morning. Go check it out. It's really super interesting to me what they're doing. They're really setting kind of the bar for how community building can work, leveraging NFTs and Web3 technology. And they've got this kind of multi-phase strategy for growing the community, integrating different types of tokens, different types of PFPs. There's another PFP collection coming out early next year. Anyway, it's super interesting, kind of techie centric still, not something that is kind of, let's say, retail consumer friendly yet, in my opinion, but they're really laying the groundwork for what the future of NFTs could look like in the future. Here, I'll show you this one webpage that I saw on the DGen network that I think you should check out. But I did tweet it this morning. So the DGen page had a fantastic recap of what's going on with Moonbirds, and like I said, I'm really bullish on what they're doing. And then Benny Sue also posted a really good quality summary of what's been happening with Proof over the last few months and what their plans are for more events. They're going to host a big event, I think, out here in the Bay Area next summer. And like I said, yeah, they're calling it Proof of Conference. Interesting name for Web3. And again, they've got some other podcasts and some other community building things that they're working on, which I think are really interesting and are going to probably more and further ingrain the community together. All right, so on the regulatory front, we've got some interesting news. California has passed its version of the BIT license, which is the New York's license regime for regulating crypto. It was reported on by CoinDesk yesterday. It has some updates because the BIT license is much older legislation at this point. So one of the things that they did address was stablecoins, and that stablecoin issuers either need to be banks or need to be licensed directly by I forget what it's called, the California Department of Financial Protection and Innovation. I don't know if that's an oxymoron or if they actually do add value to innovation, but in any case, you do need to have some type of bank charter or license from the California Department of Banks to issue stablecoins. It does look like this fully regulates exchanges. The trading of crypto is actually unregulated in California, and this would change that. And I think it takes place or it kicks in, January of 2025 is what the CoinDesk article says. I haven't had a chance to debrief with our counsel yet on this. It just happened in the last couple of days. We've been looking at it for a while, but it does seem to be real now, and it's going to the governor for signature by the end of September. All right, so the other thing I wanted to mention, now I got a bunch of questions on this. Well, actually, before I get to that, I want to talk about Tornado Cash. But before I get to Tornado Cash, somebody was asking me my thoughts on Binance last week. I didn't get to it in the AMA. I don't really have much to say. I think Binance was basically kind of acting as I don't know how you would say it. It was kind of a free-for-all when they launched the company. The company was constantly on the move. Like, you didn't even know where it was headquartered. And so if you didn't really care about any of that, you could obviously work unencumbered from anywhere in the world. They seem to be undoing that now and trying to put licensing in, but they're probably going to pay a price for that. And just acting as an unlicensed, unregistered money transmitter is not a good move. And so there's that. The other thing I saw, and this is really interesting, Alexis Ohanian, I've always been a fan of his. He's one of the founders of Reddit, and he's starting a crypto fund. And I thought that was super interesting. So I'm excited to see what he comes up with. And yeah, he's a brilliant technologist, brilliant investor, and we're excited to have him kind of dig into the Web3 community as well. And lastly, in the NFT world, I saw that Ticketmaster has started launching an NFT marketplace, which I think is super interesting. You notice I'm talking more and more about NFTs. It's a space that I'm super excited about. I'm digging in really hard. Apparently, they said down here they've done a test where they've issued several million NFTs through ticket sales, and they're using the Flow blockchain, which is what's used by, I believe it's the NBA or NFL, both for their NFT sites. So curious to see what comes of this. I think it's only good for the space. I like the technology competition using Flow and Ethereum and a bunch of other layer one protocols for NFTs. So we'll see what comes of that. I do want to talk about, as I mentioned before, I want to talk about Tornado Cash for 4 minutes before we bring on the gang. And so Rob and Deepak, give me 1 minute here. So Tornado Cash. So for those of you who aren't familiar with Tornado Cash, Tornado Cash is a mixing service, is probably the easiest way to explain it. It allows you to add a layer of privacy to your crypto, which means you can obfuscate both the sender and recipient of a crypto transaction by using this Ethereum-based software or smart contract. For the first time, the U.S. government sanctioned a piece of software. This had never happened before, to my knowledge. The website and the associated Ethereum addresses were added to the OFAC sanction list. OFAC is the Office of Foreign Assets Control within the Department of the Treasury. They maintain what's called an SDN, a specially designated nationals, with whom Americans and American businesses are not allowed to transact. It's basically a list of sanctioned entities. In practice, it means no American can send or receive money to or from these addresses without violating sanctions laws. This is unprecedented in the history of the United States. First of all, the United States Supreme Court has clearly opined on software as free speech. And even when you go back to the days of PGP, where Phil Zimmerman put his PGP key on a T-shirt and published a book with the code to clearly make the point that this was free speech, we've never had to deal with anything like this. The sanction actually identifies both the URL of the contract and a series of Ethereum contract addresses. So sanctioning, and I thought that the folks at Coin Center really did a good job in summarizing and analyzing this. They mentioned that sanctioning a tool that's not an alias of any person meriting sanction is substantially different from how the sanctions list is normally used. It's a ban on technology, and it's not a sanction against a person, right? Even worse, because the nature of blockchain transactions, an American who sent money through the Tornado Cash address is not even able to reject the transaction. So that means that you could theoretically receive crypto, right, and be in violation of OFAC rules for a transaction that you can't even block. So it's a bad look. It was not a good idea. It's led to, at least in part, to the arrest of the developer in Holland, which is outrageous. It's scary. And I hope all of this gets undone, unwound, and at least we recognize that this was a huge mistake and something that should not have happened. Okay. So hopefully, when I have more to say about this in the future, it'll be reporting that with good news that something here has happened that undoes this mess, and we'll be moving on to greener pastures as it relates to crypto and crypto regulation. All right. So enough of that. I want to bring on Robin and Deepak, and we're going to talk about trading and get into some of your questions. So how you doing, guys? You there?
Hi, Bill.
Hey, Bill.
Thanks so much for having us.
How you doing, Robin? How you doing, Deepak?
Good.
Good. It's been a while.
Yeah, it has. A little bit of a summer break.
Yep.
Still kind of in the volume doldrums of summer, I suppose. We'll get into that, I'm sure. So before we talk about trading details, we should talk about the merge for a minute. So we sent out an email to all Abra customers explaining what's happening. So Deepak, why don't you start us off and just give us a summary and an update of what's going on with the merge and how it affects Abra users.
Yeah. So high level, do nothing during the merge. We will obviously make sure that your assets are completely secure. There is going to be a bit of a pause in deposits and withdrawals to and from Abra. Probably about 30 minutes before the merge, maybe a little bit more, but we'll let you know. We have a status page, obviously, that you can go to and check what services are running and what services are paused from Abra. And this is done purely for your own protection, so that you don't transfer $100 million in ETH exactly when the merge is happening. So we don't want you to do that. So we're going to pause it, and then we will resume deposits and withdrawals as soon as things seem normal, stable, and we deem it safe to resume them. So your assets, don't worry about it. It's completely safe and secure on the chain, and everything will be back up and normal a few minutes after the merge has been successfully completed. Outside of that, Bill talked a little bit about the merge. Hopefully everything goes okay with the merge, and if that happens, then it sets up for the next era for Ethereum, and we're all looking forward to it. It's going to be a historic moment in the history of Ethereum. So looking forward to it.
Yeah, just totally agree. Just a couple of comments on the merge as it relates to Abra users. So some folks have been asking, does it make sense to hold Ethereum with Abra, put it in a hardware wallet? What should I do? So first of all, please, it is way safer if for the average user to leave their Ethereum right where it is on Abra Trade or Abra Earn, or as collateral in Abra Borrow, whatever you're doing, than to try to manage it directly. All right. There's a lot of nuances to dealing with fork chains, especially when it's not set up for replay attacks, which is the case here. It's probably beyond the technical nature of the show, or non-technical nature of the show, to get into what replay attacks are, except to say, if you try to set up your own Ethereum wallet to deal with both a proof of work and a proof of stake chain, you do run the risk of someone stealing your crypto based on a replay attack. And so I would avoid doing that and let Abra do the work for you, unless you are knee deep in the tech and actually know what you're doing. Okay, so that's one comment I would make there. And as we said, it looks like the transition or the merge, as it's called, should happen around September 13th. And as Deepak said during this event, Ethereum's consensus mechanism is going to change to a mechanism in which owners of ETH can stake their holdings to achieve consensus, and this will dramatically lower the energy costs for Ethereum versus proof of work mining as it does today. So proof of stake doesn't lower gas fees per se, but it does prepare Ethereum for future upgrades to dramatically improve scalability. So in that regard, we're super excited about it. And you can use our Twitter, and I think we have a status page. I don't remember the link. I can bring it up here. I think it's support.abra.com or status.abra.com. I don't remember. But if you go to the email, there's a link in the email that actually gives you the status page. It's status.abra.com. The team is correcting me. So it's, I'll add it to the live chat here, and you can see, but if you get the Abra emails, you'll see what I'm talking about. Okay. Anything else to add on the merge? Any other?
Yeah, maybe I'll add real quick. If you do self-custody your crypto, just be careful of the tremendous spike in spammers trying to reach you to get your money, giving you forked tokens and whatnot. It's going to get very complicated. I myself have seen spammers target me as well. And it's going to be on the rise. Every time a fork like this happens, scammers go crazy And so if you do self-custody your crypto, be very, very careful and don't interact with people that you don't know. But that's just a PSA there.
Yep. Yep. How you doing, Robin?
Hey, Bill, thanks. Thanks so much.
So Robin, why don't you have a really interesting role at Abra.
Yes.
And it's kind of a role in the background that a lot of our big clients are very happy about, but maybe a lot of our viewers don't normally see day to day. So why don't you give everyone an overview of what you're up to at Abra and what you're seeing?
Perfect, Bill. Thank you so much for having me on here. I'm the co-head of OTC trading here at Abra. Of course, Abra has been around for more than 8 years, and we have an ever-evolving product side. But finally, we actually have a trading desk at this point. So this year we have a few traders that have come on board. We have experience on the buy side and the sell side. We have that come from institutions like Goldman, HSBC, Bank of Nova Scotia, Peak Six, and so we're bringing all that experience and now finally being able to launch a bank-style OTC desk. We're starting off with the spot product. For now, it's going to be crypto to crypto, around top 10 pairs this month. And moving forward, by the end of next quarter, we're looking at offering a bunch of other products that are offered on, let's say, for example, an FX OTC desk, which are forwards, NDFs, non-deliverable forwards, and options. So a bunch of structured products. That's our goal for this year. And we're also looking at offering daily as well as a more nuanced commentary on macro markets and how they affect the crypto space. So something that you may not see currently in the market, but we're essentially replicating the sort of market research that gets done on a bank desk like Goldman's and bringing that here.
Super cool. So two questions there. So first, what is the kind of demand that you're seeing right now for and for specifically which kind of products? And is it with exchanges? Is it with market makers? Is it with hedge funds? All of the above?
Right.
High net worth individuals?
So the first thing, as you mentioned earlier, Bill, it's a sideways market over the last 3 months. So in a sideways market, it's very hard to time what's the low or what's the high. So in markets like this, it's perfect. Options are a perfect product. We, of course, are targeting the end of Q4 to launch that. But a perfect example of a product where a entity, a high net worth individual can benefit from options is, over the next quarter, we know the Fed is going to be higher for longer, which means they're going to raise rates. But at the same time, we're finding support in spot. So the market's going to keep on finding the Fed, but the Fed's going to keep on raising rates. And spot, BTC, and ETH will fail to make new highs. That's a perfect environment for someone to sell covered calls. They already are long ETH and Bitcoin. So you can generate additional yield for very little additional risk. I'd say at least until Q1 of next year, because the Fed's probably not going to change its tone until then.
So this is an example of a tool that traditional markets have used to address volatility and kind of choppy markets for years, right?
Yes, of course, in the FX space, you have corporates that have needs in different currency pairs. They have been using this covered call sort of a tool for 30 or 35 years.
Yeah, gotcha. And so what's your take on where we are right now, and what kind of message are you sending to clients, and how are they responding? Right.
So of course, this year, the major trend has just been Fed speak and FOMC reaction to the inflationary state of our economy. Since they started raising rates, we've found the correlation with risk assets, that's equities and crypto, to be not one, but close to one. Crypto, of course, is slightly more nuanced because it reacts differently to geopolitical risks. But largely, if a Fed speaker says something, that has a very strong reaction in crypto, as we're seeing. I'd like to borrow a quote from the great Wayne Gretzky. In terms of Fed policy, he said he skates to where the puck is going, not where the puck is. And I think the Fed should learn from that. It's their current monetary policy framework really is pre-pandemic. It's meant to address deficient aggregate demand, whereas we're post-pandemic now and it's deficient aggregate supply. So until the Fed changes its monetary policy and sticks to higher for longer philosophy, we can expect sideways trading in spot. And so vol levels being where they are, options are great to short on the top side and collect some yield.
Yep. Okay. So a couple of user questions that are coming in, and I have gotten these questions before. So one question was about desktop trading. Will we be making OTC trading available via the web? And what are our plans in general for desktop-based trading? So Deepak, you want to address both of those?
Yeah, we are working on both actually very actively on the non-OTC side, desktop-based trading, retail web-based or web browser-based trading. That we're close. We're still targeting end of this year, and the team is working very hard. We're making good progress there. We're very positive that we'll be able to launch end of this year. But at the same time, on the there's some interesting things that we can do from an experience perspective where, we can integrate OTC desk into that experience, into the trading experience, to really make the user experience a lot better, especially when it comes to specific types of trades, very high volume, faster trades, more frequent trades. And there's a way to seamlessly integrate the OTC experience into it, which is also something that we're looking at. Probably end of this year, early next year, we'll see. But most definitely, we're looking to launch the web experience for at least trading for retail customers end of this year.
Yep. Okay. And then Robin, what is the user experience today? So are users communicating with you via Telegram, via voice? How does that work today?
So we're looking to implement a classic sales dealer model, which works at banks. Most clients will be interacting with our sales folks, and the sales and trading teams works hand in hand with ops and communicates how a trade is actually settled. This won't be a platform that's probably ready for retail experience just yet. It's probably going to take some time for a web experience, but currently it's more meant for a classic bank style desk relationship.
Yeah. So let me, while we're talking about this, let me just show the gang here. So for those of you who may represent institutions or opportunities for trusts or private clients, if you go to the webpage, abra.com, you'll see here, it talks about individuals, private clients, and institutions. If you click on institutions or private clients, you can get in touch with the Abra team by clicking on the Contact Us button. Fill this out, and the sales team will get you set up. We can get you set up with a trust account. We can get you set up for corporate treasury. We can help you through your, if you have an RIA, a registered investment advisor who wants to help you get into crypto. We're set up via myriad means to help people, entities, high net worth individuals with kind of a white glove service get into crypto. And there's also a very large team, both on the sales side as well as the trading side. And Robin represents, of course, the over-the-counter trading. And a lot of this is, growing very fast for us. And so contact us. We'll get you onboarded, and it's pretty straightforward. And so I'm not aware of any jurisdiction in the U.S. where we don't support for corporate accounts, high net worth individuals, over the counter trading. Of course, you guys correct me if I'm wrong there. Okay. Let's see. So some other. Oh, I know what I wanted to ask. So Deepak, let's break away from the merge and talk about some other updates. What are you most excited about right now, and what's coming down the pipe the next couple of weeks?
Yeah, next couple of weeks, hopefully. But we've been talking about our migration of trading infrastructure for a very long time. Yep. If you've been following us on Money Talks, just to give you some context, if you haven't been following us, the trading infrastructure that we currently use, that you all experience in our apps, that was set up years ago at this point. We have reached, both from a scale perspective, experience perspective, flexibility perspective, the limit of what that infra could have done. And so we've been on a months-long process of migrating that infrastructure into what will be, the infrastructure of the future. And it's been a very complex project for us. Many teams at Abra have been very diligently working on the project, and that has delayed a bunch of things, right? So if you'll remember, we were planning to launch market orders and limit orders earlier in the year, but this particular project forced us to delay that a little bit. Again, our mantra here at Abra is not to launch things that we aren't proud of just because we want to get to the market sooner. We want to make it perfect. We want to love what we build, and then we want to present it to our customers. And so along those lines, it's been a hard journey, but we are almost there. We're probably 2 or 3 weeks away from a complete transition. And when that happens, we will also launch market orders, true market orders, and a very cool feature that will accompany the market orders feature is going to be price safety. We're going to call it price safety, which basically means that regardless of how volatile the markets are, if you place a market order, from the time that you place the order to the time the order actually executes on the markets, if the market has moved 1% worse than where you wanted it to be, or when what you saw when you were actually placing the order, then we will stop that order. So you don't lose more than 1% of that trade, depending on the volatility and how fast the markets are moving. So it's basically a stopgap, right? You couldn't do worse than 1% if you enable that. By the way, that particular feature is going to be optional, so you can always turn it off if speed is of essence to you. But we're very proud of that. It was a creative thing to do, and we think it's going to add a lot of value. But regardless, it's that market orders, price safety on market orders, and the upgrade of the trading infrastructure are all going to land all at the same time, about 2 to 3 weeks. So that's very, very exciting. And it also sets us up very cleanly for a future launch of true limit orders, which is also something that we've heard a lot about, a very highly requested feature, and we're excited about. So that's the number one thing that the team is focused on, and we're almost there.
It's awesome. So clearly, not much of a break for the Abra team this summer. Looks like, I know we're in live testing with the new trading solution right now, and people should see, especially for certain altcoins, dramatically reduced spreads for things that maybe you thought weren't as liquid or didn't have as high of a trading volume. Those spreads should come way down on the trading side. It also sets up our ability on the OTC desk to have access to more liquidity and more sources of better rates for larger orders. And it also means on the retail side, if I understand correctly, that the limits should be dramatically increased on trading orders. Absolutely. And maybe increasing over time as we go and we get more comfortable with the new trading platform. So I know many of you have been asking for much higher trading limits for a long time, so you don't have to either chunk orders anymore or move off of Abra to use Abra to buy Bitcoin to get it on Abra Earn, for example. All of that can be done in very large amounts directly with Abra now, with everything you're talking about.
Absolutely. Yeah.
Awesome. All right, so let's see. So some other questions I'm seeing here. What's going to happen? When is Abra launching NFTs, and how does that relate to C-Perks? I don't know if you want to talk about that. Your favorite question?
No, I mean it is actually my favorite question. So NFT is something that the entire company is extremely excited about. You've heard Bill talk many times about NFTs, even in this show. So we're very excited about it. We are still on track for end of year launch for NFT, probably in the November-December timeframe, which is going to be very exciting. And really, for those of you who haven't kept up. The whole experience that we are bringing to the market, we think is very, very differentiated in that if you've ever interacted with NFT marketplaces, with self-custodied wallets such as MetaMask, or even Coinbase's self-custody wallet and Binance and so on and so forth, you know that it isn't, to say the least, a checkout for NFTs. It isn't. It's a long process, many clicks involved. Most of the clicks, you don't know what you're doing, and then hopefully, end of the day, you get the NFT. Whereas with Abra, you're going to do all of that in 1 or 2 clicks. You don't need to care about which currency is being used. You don't need to care about anything except the asset that you're interested in. And it's going to be 1 to 2 clicks, and NFT is going to be in your gallery. So very, very excited about that. That's going to come in later this year. Now, as it relates to C-Perks, C-Perks is at the core of all our go-to-market strategy when it comes to rewards. At the moment, though, you guys have followed us, so we had launched Abra Perks, the first version of Abra Perks, last year, in fact, November 2021, and it was very, very successful for us. But we had some lessons too during that experience. I guess that's Bill is trying to show the NFT experience here. So I'll probably wait a little bit and probably show you what's happening here. So you go tap on buy NFT. You can go to OpenSea directly, explore more collections. You can tap on a specific NFT that you like, buy now. You've got to select Abra as your wallet, checkout, confirm transaction, and there we go. That's as simple as that. And it appears in your My NFT collection. So I bet that's not the experience that you've seen in MetaMask. So super excited about that. So thank you both for bringing that up. But going back to Abra Perks a little bit. So the team is actually working on the next generation of Abra Perks. So like I said, for the first generation, we did learn a bunch of lessons, and we have identified ways to make Abra Perks even more useful and experience a little bit more intuitive, and really going back to the core of C-Perks, which was designed to be a utility token. So adding really utility to all our products and services. And so it is a bit of a work in progress right now, but we will definitely launch Abra Perks 2.0 in a big way, either later this year or early next year. So we're really looking forward to that. And when that happens, again, C-Perks is like what airline miles are to airlines and hotel points are to hotels. That's exactly what C-Perks is to us. It's a loyalty point tokenized on the blockchain. And so it's at the core of all our products and services. So we're very excited to be working on the next generation of Abra Perks. And when we launch that, C-Perks is going to be at the heart of all products and services, existing and future. So looking forward to that as well.
Oh, fantastic. So am I. I think it's super exciting. And I've done a ton of meetings this summer. I actually planned a lot of travel around being able to meet with varied folks in the NFT space. We've got some partnerships that we're working on in the NFT space, not only with the marketplaces that you saw in the demo, but with artists and curators and events. We've got some big stuff happening in the fall. I know Art Basel it's hard to believe we're talking about Art Basel, which is post Thanksgiving, but it is a big deal for us and happens to coincide with the timing that you're talking about. So we'll see what that has to bring. But I also think that the intersection of C-Perks and NFTs is super exciting, and the potential there. When I talked about Moonbirds and what Proof is doing, they're kind of doing it in the reverse order, where they created the NFT and the PFP first, and then they're going to add tokens afterwards. But I think the idea that we could leverage C-Perks to create custom opportunities in the NFT space and integrate that with the Amex card, which we should talk about in a minute as well, it's just awesome. And it's something that I think no other company or entity is equipped to do in the way that Abra is equipped to do it. So that has me unbelievably excited about the future of all of this, but C-Perks as well. So why don't we talk about Amex, and how you're feeling about that. And I know we're going to see the team in New York, or I'm going to see the team in New York next week. So we should talk about New York in a minute as well. But what's your take there?
Yeah, very exciting as well. We have a lot of exciting things going on at Abra. It's becoming repetitive. But anyway, we are on track to launch credit cards at the very end of this year. There might be a chance that it might spill into Jan of next year, but the team is full steam ahead, trying their best to launch this year. So very excited about that. It's a very complex product. There are multiple entities involved: the network, the issuing bank, us, obviously, and so on, the processor. And so it's a very complex project, and the team is at this point days from putting it into testing. The testing process is going to be a little long in the credit card world. Got to test a lot of stuff, both in the physical world. Like some of the fun things that you get to do with this is basically go with the card and swipe it at the gas station, swipe it at groceries, swipe it at supermarkets. So it's a fun process, but it's a long one, and we need to be very diligent about it. So we're not slacking there at all. The team is full steam ahead. Hopefully we get to launch it later this year. But if not, definitely as early as possible next year.
Yep. Fantastic. I can't wait to use it myself. We're going to tackle the US market first, and then look to add more card offerings outside the US on an as we can basis. Unfortunately, cards tend to be very country specific, although we try to be global in our thinking at Abra. Banks and card issuing networks tend to be very, very local in nature. So, okay. So let's see. So we got some questions here. Some great compliments for both of you guys, Robin and Deepak. Good stuff. People are really liking some of the commentary. And so question here for Robin. What is your prediction for Q4, and what do you see for the rest of the year in the crypto markets? So I don't know if it's kind of a loaded, very general question. So the good news is you can do anything with that question you want, right? So,
right. Well, the first good news is it's only for Q4, so I'm not Nostradamus by any measure, but for Q4, just going off of what Chairman Powell has said in his Jackson Hole speech. Both households and businesses should expect some pain. They're probably not going to let go of not hiking rates this year, which means there's definitely going to be some pain for households and businesses. That means for crypto, we will fail to make new highs, anytime this year. But if you do want to generate yield, that's where you can play the forward and futures curves, as well as other derivatives such as options. Mm-hmm. So spot, of course, if you just want to hodl, that's great. But if you want to generate additional returns with very little risk, and actually options are a great product because you can price up anything you want, really, depending upon what your view is. Of course, you have to have an informed view first, but depending upon your capacity to take risk, we have a product for everything that you can think of. So let's say for example, let's just say that you think spot's going to break out of its range before December 31st, mm-hmm. for reason X, Y, or Z. But you don't think it's going to be a violent move. So what you can do is you can long a straddle at the money straddle, and you can short wings, so way out of the money strikes on both sides. Okay, so stop for a second and give us a 30-second newbie primer on how a straddle works. And that's interesting because I think we should probably spend some time over the next couple of months, like kind of slowly introducing these concepts to some of our users here who I think will find this interesting. But let's start off with a straddle. Right. So a straddle is simply where you can long two options or short two options. Long a call and a put, or short a call and a put. If you long these two options, you are longing volatility. You expect prices to be volatile or moving forward, really. Shorting these two options means you believe spot will be range bound. Spot will not move until the expiry of the option.
So traditionally, just to put that in very simple terms, if I buy a straddle, it's like saying I want to play both sides of the fence, right? And I think that the cost of making a bet that the market will go up or the market will go down in combined is cheaper, right, than actually any gains I would make, regardless of which direction the market moves in, which is kind of counterintuitive to most retail traders, right?
Yes, precisely. So your view in this case is simply that market won't be range bound. Spot should not be where it's at. It should either be far lower or far higher.
Yep. Got it. Okay. Very cool. So that's a great example, I think, of the type of product that your team is uniquely positioned to help our institutional high net worth users, and hopefully eventually retail. The government makes it very hard for us to offer some of these derivative products to retail, unfortunately, but I would love to get there at some point. Okay, so let's see if we got some more. It was a brilliant explanation. Thank you for that. Now, let's see. Oh, questions on staking. I've seen this a couple of times today. What is Abra doing in terms of adding more assets to staking for Abra Earn, and any updates to Abra Earn coming in the near future?
So staking products, we are always on the lookout for more products to add in terms of staking. And I should note that the trading infrastructure comment that I made a little bit earlier, that's also going to make it easy for us to add very quickly more staking assets as well. So the team is constantly on the lookout for new assets. Obviously, we do have the Ethereum staking live right now. As soon as it has to, every asset that we list goes through a rigorous process, whether it's staked or non-staked, to make sure that it's there's enough liquidity there, it's as close to zero risk as possible, and there's demand from our customers. And so I don't have any specific assets to announce, but just to say that we are constantly on the lookout, and we will keep adding more assets to the list.
Yeah, we brought up the current rates. You can see specifically on the staking front, Polkadot, Polygon, Ethereum. As a matter of fact, Ethereum staking is not listed here. It's just the Ethereum on the lending side. We actually have two versions, and I'm bringing up my Abra app right now to look at the Ethereum rates, but yeah, so we support both staking as well as kind of lending based, or what we'll change the name, but it's referred to as ETH2 right now, and the rate is 4% if you're staking Ethereum through Abra. So that's a great deal. Of course, it's locked up, all right, and then of course we have our dollar rates. And then our tether rate, which is at 10%, which is fantastic. I don't know anybody who's paying as safe of a yield on any kind of dollar stable coin as Abra is right now. So the rates are fantastic. It's a good time to be getting into Earn, and I think that we will be seeing more from Abra on the staking and yield front in the coming months. By the way, maybe as a segue into New York, since we only have 12 minutes left, and I do see a couple of NFT questions I want to get to, but today is September 2nd. We do have some really big, exciting stuff coming up for the next couple of weeks. I'm going to be in New York the next couple of weeks, starting mid next week. We've got the SALT conference where we'll be making a big announcement. It's tentatively planned for September 12th. So that's 10 days from today. That's a big deal for us. We've got some really big news about the future of Abra, the entire future of Abra. So I'm really excited about that. Maybe one of the biggest announcements we've ever made. And then, so I'll be on stage with Anthony Scaramucci, and then we'll be at the Digital Asset Summit. And I'm doing a panel with Mark Yusko, Dan Tapiero, and also really excited about that. Those guys are awesome. And so I'm kind of humbled to be able to talk with them about macro and what we're seeing crypto and our plans there. The team will be at Masari Mainnet conference the week after that. So that whole kind of UN week has turned into UN month, and crypto has managed to integrate itself. And I'm excited to get to catch up with the Amex team in New York. And I know a bunch of folks from Abra will be in town for that. So if you're in New York in September, look us up, reach out, and we'll find us. So yeah, and a couple of other questions here. So good question. Dave asks about Solana support. So let me try taking that one, Deepak. You can fill in the blanks. So with the migration to this new trading system, we are changing the way custody works, and that will allow us to add new assets such as Solana faster. So my prediction is you'll see Solana live before the end of the year. Total, guess on my part, but my guess is you will see it this year. And this move to the new system will allow us to add non-ERC20 assets much, much faster than what we had been able to do before with the existing system limitations. People are asking me what NFTs I own. That's a really good question. So I've purposefully not disclosed that. And I'm setting my collection up right now to disclose around the time Abra launches. I've been doing a deep dive. I've got a bunch of friends in the NFT space, Trippy and some other guys that I've been hanging out with who've been helping me kind of, understand this world. Yvonne from MoonPay, really good guys. And so anyway, so I'm going to kind of disclose my collection in the coming weeks, and I'm looking for input. So ping me on Twitter if you have thoughts on what I should be looking at. I've been looking at Moonbirds and Bored Apes, and anyway, I've really tried to the crypto dick buck community I think is absolutely hilarious. Not necessarily sure where that's going, but it is pretty funny. So let's see. So yeah, Yellow, same comments as the Solana. You'll see a lot more listings on Abra this year as a result of the migration to the new trading system. All right, so let me stop the share here. You guys got your update on the rates. So let me see. So we talked about new listings. We talked about what's next in Q4. We talked about staking. Let me see. Let me take one more interesting question here, and then we'll sum it up for the day. Let's see. So getting lots of comments on you guys. Good job. So, oh, by the way, so we've got, I don't know if you guys are aware of this out there in YouTube land, but we actually broadcast this on Twitter, Twitch, Facebook, Instagram, not Instagram anymore, YouTube, Twitter. So I'm seeing probably about 1,000 people in the aggregate across all the channels. It'll really help us if you hit the like button. And whenever you come in, whether it's Facebook, Twitter, YouTube, hit that like button, click the subscribe button. It helps us in terms of optimizing the search as well. So help us out and click those like buttons across all of the platforms, whether you're watching on Twitter, Facebook, or YouTube. All right. Let's see. So I see some friends here. Seeing a lot. We get a lot of the same folks joining us every week. I love that. I love that you guys look forward to this. We look forward to doing it. I actually by the way, I had no internet until 7 a.m. my time, 2 hours before. Normally I'm up at like 5 a.m. on Fridays preparing and looking at news. And I was kind of freaking out because I had literally no internet connection until almost an hour before we went on. And I had to take my son to school. So I ran out and I was looking online to see what the hell was going on, and to see if there was anything from my preparations from the night before that didn't make any sense, because things are always changing here, which is why I have to get up so early on Fridays to work with my team to prepare. So, but anyway, it all worked out, and here we are, and you're listening to me spew nonsense about my internet connection. So anyway, let's see, that I had a great question, and now I lost it. Oh, I know there was a question. Who am I signing up with if I get a over-the-counter trading account? You're actually creating an account directly. You're onboarding directly with Abra. And we have different companies within the Abra holding company structure for different services, both inside the US and outside the US, but you're working directly with Abra when you're doing that. And our sales team directs you for the onboarding process, handholds you. It's really simple. It's a simple doc drop, and know your KYB, know your business, or KYC if you're an individual for know your customer. And usually the process takes, some cases it's same day, some cases it's a couple of days. Okay, so great question there. Another question on when we're going to list Shiba Inu. Hear my earlier comments, and yeah. So any closing thoughts on anything you guys are hearing today, seeing today, anything that's happened in the market since we started talking? How about Robin? Go ahead.
So really, I think we should close it by commenting on the unemployment rate that came out this morning.
Yeah.
I think that should support, again, I'm not going to comment on what the Fed will do in its September 20th meeting, but it looks like it should put some doubt in their minds that this economy is as hawkish as they're claiming. So finally hoping that some of those doves over there in Fedland start acting like doves.
Yeah, it's coming. We just have to be patient, right? So I think I call it the big pause, and I don't know if it's going to be Q4, Q1. It really doesn't matter to me personally, because I know that, basically the next cycle is going to be a 10 to 15x run, most likely on Ethereum minimum, potentially more. So whether it happens now or, next summer, doesn't really matter that much. I think it's just a kind of a broader understanding of how money supply affects crypto. And as soon as we get back to lower rates and the money supply is increasing, which it has to, because the Fed can't support, the Treasury can't support the debt with 6% interest rates. It's just not possible. The amount of money we'd have to print just creates a negative feedback loop that would kill us. So you're obviously right. It's just a question of timing and how it's all going to play out. Two other questions that came in. I saw on the YouTube feed. I haven't checked the Twitter feed in a couple of minutes, but on the YouTube feed, I'm seeing one is about war in the Ukraine affecting crypto, and the other is Abra running a referral program right now. So Deepak, I'd love to get your thoughts on the referral concept, and I think we're not running a referral system right now, and what your thoughts on what we might want to do there, or what can users do to take advantage of opportunities?
Yeah, so on the referrals, that's right. But we are looking to add referrals, some sort of rewards associated with. I mean, you can refer right now. If you love us, go into Abra, go into your Abra perk screen and refer your friends and family and your audience. But any rewards associated with referrals, we're looking to add more in the future. Most definitely, we will do something this year. But as you know, the entire market has gone down anyway, and we're sort of going through a slow drag in the macro. So we'll have to be very, let's say, careful about it and opportunistic about it. So I suspect we will add some before the end of the year. But obviously, like I said, please go. If you love us, definitely go refer your audience.
Yeah, perhaps a broader comment on this. And I agree. I think we will get to referrals in short order. But Abra we've always basically been playing the long game since I started Abra now 7 years ago, or however long it's been. And as a result, we've never been the company to go out there and spend $150 million renaming an arena, or I guess $1 billion to rename an arena, or $150 million to put our logo on a Formula One track. And as much as I'd love to, as a Formula One fan, it's just not, it's not part and parcel to the long game that we've been contemplating. And as I've watched some of our competitors die this summer, which I didn't want to have happen, I think Abra is a better service and would prefer that we win in our own rights, but and on our merits. And as a result of some of the crypto contagion that happened, via what we know transpired, Abra has significantly fewer competitors in the marketplace now than we did 3 months ago. And the question obviously then becomes, okay, so how is Abra in a position to, I hate to say take advantage of it, but let's just say take advantage of it so that we can get the word out. And it is something that we're now starting to really think a lot about at Abra, and going into late this year, early next year, we will be investing significantly more in marketing than we ever have before, with the Amex product, with the NFT product, with our new institutional services. And so, we're able to grow in a market where a lot of our competitors are either dying or revenues are plummeting. And so it does behoove us to start to invest in marketing. And it's something that now, we are thinking a lot about across the entire team. And I know, Deepak, you're involved a lot in those conversations as well. So I'm excited about that. And
I'll add really quick, in our emails now, we add a blurb about risk management and how Abra views risk management in most of our emails. And I want to point out that if you read that blurb, you would see that sustainability is at the core of everything that we do. To Bill's exact point, is that we take a long outlook. We're we see ourselves as a 100-year company, right? Like this is a market that is going to be the de facto market of the future, and that's all why we're all here. And so we definitely do take a long view, and sustainability is at the core of everything that we do. So just want to point out that there is that blurb. If you have any free time when you get Abra emails, you don't have anything else to do, read the blurb. That's exactly how we operate, and we're proud of it.
Yeah. We did a company update yesterday. I think it was about 100 people showed up, because we have people on different time zones. So regardless of when we do it, it's not possible to get everybody on at once. And we updated everyone on the announcements that we're planning to make on September 12th at SALT. And it really does support this idea that this is a long game. And when you look at this, you're like, wow, Abra's really kind of in some ways laying chess pieces for a very long game about the future of banking. And 10 days we have the next big step. So I keep using the word exciting. I know you keep using the word exciting, and I apologize to everyone if it's annoying, but it is what it is. We are excited about it. And I'll finish off with Catherine had a question about Ukraine affecting crypto, and this is a tough one because I have a lot of friends who are Ukrainian. We have employees in Ukraine, and on the one hand, I would venture a guess that crypto or Ukraine has had minimal to no impact on crypto. I'm guessing that there's probably some usage going on in terms of people getting paid in Bitcoin, people getting paid in stable coins. But in the big picture, those usage numbers are tiny compared to the overall size of the crypto market. Now, that says a lot about how far crypto has come when an entire country can be moving, 10 to 15% of the money around, and it doesn't really have a significant impact on the crypto market itself. Now, if that was to happen in the US, where we had 15% of the US GDP moving around, crypto would be worth probably $5-6 trillion as opposed to, or maybe even $10 trillion as opposed to one. So just put it in perspective, Ukraine is obviously different than the US or Europe. That having been said, it is showing us the resiliency of Bitcoin, and we've focused more on Ethereum lately because of the merge and some of the kind of macro tailwinds that Ethereum has with its upgrades. But Bitcoin resiliency is its best feature, right? It has basically been attacked from every which way, right? Whether you agree with its current state of technology development or not, it's still here. It's the gift that keeps on giving, as they say, and what's happening in Ukraine is another example of that. I've been reading a lot about this Fedimint stuff lately. I'm not really ready to talk about it on air in a lot of detail, but if you're interested, you should go check out Fedimint, and it's something that relates to decentralized custody, which is obviously not our business, but it's something I'm looking at for our future as well. And it relates to also what's happening in Ukraine, where you don't want to have untrustable third parties in the middle of your transactions who may be not regulated the way we are in the US, who may be confiscating your crypto or your cash, which is something that happens in countries like Argentina. It seems like every 5 years. Okay. Anyway, so not exactly the question you asked, but there you go. So we'll stop there. And yeah, so thanks for the comments on marketing. We do need to get the word out. So since we're not going to use the gimmicks that all of you are referring to, we're going to rely on all of you to be telling your friends to download Abra, use Abra, join us on Money Talks on every Friday or every other Friday, whenever you can get to it. And obviously, we leave the videos up on YouTube, and we get a lot more people watching over the weekend than we do watching live on Fridays. And so I don't know if Friday mornings is the best time for the show, but it seems to be getting a lot of views. And even in the down market, I noticed that, obviously the number of views goes down, but it's pretty resilient. And those of you on YouTube may not realize that we're doing it on Twitter and Facebook, which in some weeks actually get more viewers than even YouTube. All right. So again, I'll stop there. It's 10:04 here in the Bay Area, and I wish you all a great weekend. Robin, Deepak, thanks for joining us. Loved your insights, and we'll look to have you guys back on regularly and again very soon. Take care, everyone.
Thanks, Bill.